Did you know insurance brokers in Canada can make anywhere from $45,000 a year all the way up to over $250,000? And for some top performers, I'm talking 7 figures. But here's what nobody tells you. It's not just about sales. The income structure in this career is actually way more interesting than most people realize. So in today's video, I'm going to break down exactly how insurance brokers make money in Canada, every revenue stream, the real commission rates, and what it actually takes to get there. Hi, welcome back to the channel. I'm Jack from PNC Learning. If you're thinking about becoming an insurance broker, or you're already in the industry and want to understand your earning potential better, this video is for you. I've been a licensed broker in BC for over 15 years, and I want to give you the real picture, not the watered down version. So let's get to it. First, let's quickly clear up what an insurance broker actually is, because people mix this up all the time. A broker is not the same as an insurance agent. An agent works for one company. They can only sell that company's products. As a broker, you work for your client. You're independent. You can go out to the entire marketplace, compare products from multiple insurers, and find the one that's the best fit for your client. That independence is a big deal, and it's also what makes the career so interesting from an income perspective. So how do brokers actually get paid? Let's start with the most straightforward one, salary. Many brokers, especially when they're starting out, receive a base salary or hourly wage from the brokerage they work for. The brokerage earns commissions from the insurance companies and then pays you from that pool of commissions. Now, your pay structure really depends on your role. If you're working in a more support-focused role like marketing, which in insurance means negotiating quotes with underwriters, your pay is usually skewed more towards salary. But if you're client-facing, doing sales and account management as a what we call producer, you'll likely have a lower base salary but higher commission potential. So both models exist, and many brokerages offer a mix. It's actually quite negotiable depending on what you can kind of advocate to get for yourself. Now here's where it gets really interesting. It's the commissions. This is the primary income driver for most insurance brokers. When you place a policy for a client, the insurance company pays the brokerage a percentage of the premiums, and those percentages can vary quite a bit by product. For regular personal and commercial insurance, thinking like car, home, or business, commissions are typically around 20%. For policies placed through MGAs or managing general agents, you're looking at anywhere from 15 to 20%. And life insurance is a completely different animal. First year commissions on a policy can go from 30% all the way up to 100% of premium, but they usually drop to just 2 to 5% in the renewal years. If you're dealing with surety bonds, commissions can go up to 30%. So here's the part I love about this career: renewals. Every year, your client renews their policies, you earn a commission again, without doing anything new. That recurring income builds up over time like a financial flywheel. So if you go the entrepreneurial route as an independent producer, essentially operating as a contractor rather than an employee, you typically split commissions 50-50 with your brokerage, but you often own your book of business. And that book of business is an asset. Brokers have sold their books typically for 2 to 2.5 times annual revenues. So you're not just earning income, you're actually building something you can sell one day. Quick pause. If you're finding this useful, hit that like button and subscribe. I post practical content like this for people navigating the insurance industry in Canada, and I don't want you to miss the next one. Now, on top of regular commissions, there's also contingent profit commissions, or CPCs. These are bonuses paid by insurance companies to brokerages that maintain a profitable book of business. So factors like your growth rate, loss ratio, retention, and business volumes all play into this one. Think of it as the icing on the cake. It's not guaranteed, but is definitely real. And then there are service fees. Some brokers charge clients directly for specialized services, like complex risk assessments, detailed policy reviews, claims advocacy, basically any work that goes above and beyond placing a standard policy. These fees are regulated, so you need to know the rules in your area. There's typically required disclosure and written consent, and some provinces have additional restrictions, especially for personal lines. What does that actually look like in dollar terms? Entry-level brokers typically start in the 45 to 70K range annually. Mid-career, like with a few years of experience, you're likely in the $75,000 to $150,000 range. Senior brokers at large firms, I'm talking companies like Marsh or Aon, can typically earn well above $200,000, including benefits, RRSP matching, and in some cases equity. And for commission-based producers in commercial lines or specialty markets, there's really no ceiling. I personally know many brokers pulling 6-figure commissions and some reaching 7 figures. And these are real numbers from real people, not outlier superhumans. Now let's be honest, there are challenges too. Commission-based income can fluctuate, the market is competitive, and the regulatory environment changes. And yes, online comparison tools are putting pressure on simple commodity products. But here's what I keep seeing. Brokers who specialize in complex niches like commercial lines, D&O, and liability, and emerging sectors like blockchain or serving high net worth clients are doing exceptionally well. The more complex the risk, the more valuable a skilled broker becomes. So digitization isn't something that's going to kill this career. It's actually weeding out the generalists and rewarding the specialists. Add in strong networking, digital marketing, and technology adoption, there's a real opportunity here. So this career appeals to you. How do you get started? In Canada, insurance broker licensing is mandatory and varies by province. In BC, Saskatchewan, Manitoba, and Atlantic Canada, you'll typically start with the Fundamentals of Insurance course. In Ontario, it's called the REBO 1 course. In Alberta, it's the GLQP Level 1. Most entry-level licensing requires somewhere between 60 to 100 hours of studying. From there, you can advance with designations like the CABE, the Canadian Accredited Insurance Broker, or the CIP designation, which really signals expertise in the market. At PNC Learning, we've built our courses specifically for this path. You can study online at your own pace while keeping your current job. We have scholarships and payment plans starting as low as $21 a month, and we back our programs with a pass guarantee. So if you don't pass the first time, you can come back and study for free until you do. The link to sign up is in the description. So to recap, insurance brokers in Canada earn through salary, commissions, and contingent profit commissions and service fees. The income range is wide, from $45,000 to newcomers up to 7 figures for top producers. And the structure rewards people who build relationships, who develop expertise, and think long-term. If you're considering this career, drop any questions you have in the comments below. I read every one. And if you found this video helpful, share it with somebody who's thinking about getting into insurance, and I'll see you on the next one.